Welcome to this lecture. Today we are going to deal with these topics little quickly but in detailed approach. My name is Gunjan Subedi and as always I'll be guiding you in this topic with practical explanation and examples when necessary. Before starting, let me kindly remind you to subscribe to my Lean University, which is my initiative to deliver free and quality professional education to your screen. We all do business with one principal goal. Well, some may say that they do business for humanity or many other purposes, but one purpose of doing business is universal, because without it, there is no business and there is no revenue. That's revenue growth. And to monitor the revenue, we have a key performance indicator, revenue growth rate, which is one of the main key performance indicators to assess the growth of any business. If the business growth is the goal, key performance indicator is revenue growth rate. To have a clear picture of revenue growth, it should be compared with same length time frame. For example, you can compare the revenue growth of this year compared to past year. It is even easier to calculate the key performance for past data. For example, you can take data from income statements or general ledger. We will do some problems on revenue growth rate later at the end of the section with the financial KPI quizzes. But for now, let's head into another subject, net profit margin. Another important financial key performance indicator is net profit margin. This indicator is a key metric in explaining how business is running. So what is net profit margin? It is the profit generated from each dollar sale. When the profit margin is high, we can say that our business is doing good. When the net profit margin is low, we mean that there is something wrong with our business or sales or pricing strategy. Let's look at the formula. Net profit margin is the net profit divided by revenue times 100. Or we can also write it as net profit times 100 divided by revenue. Revenue is the total amount of income generated by the sales of goods or services related to company's primary operations. Revenue is also known as gross sales. So we'll also do the calculations related to net profit margin at the end of this section. Thank you so much for being with me. There's more to come on the financial KPIs in the next lectures. Before ending this lecture, let me remind you to join my Lean University's premium membership and enjoy a total free access for limited time inside my Lean University's online library and get tons of free courses, free books and lecture topics on project management, Lean and Six Sigma, operations and supply chain, productive and preventive maintenance, quality maintenance, data science, industry and sales management, agile and scrum, kaizen or continuous improvement and much more totally free. No strings attached. As we have limited seats, only the early subscribers will be given open access inside the premium membership, and remember, it's totally free. Please subscribe and share the video if you share the common belief that professional education should be accessible to all.